What is good, y'all? In this YouTube video, I'm going to be explaining my strategy and kind of just the basics of the market as I were explaining it to a toddler. I'm going to explain it in the most simple terms you could ever think of. So this is more of a beginner kind of understanding video, just a simple way to understand my continuation strategy and the way I look at the markets as if I were explaining it to a baby. So let's get into the first and arguably the most important concept, which is draw on liquidity, right? Because every single trade you take will be based off draw on liquidity, and if you do not have a draw on liquidity, you are not actually trading. You're simply just gambling, right? So as a toddler way, if I were explaining it to a toddler looking at draw on liquidity, always just look at it as, okay, I'm looking to target pointy parts in the market, right? If it does not stick out, if it is not prominent, then I might not take that trade, right? So it goes for every single time frame. You see here, pointy low, pointy higher, right? It's like a sore thumb in the market, right? You see this little low here, yeah, it's a decent draw, but it's not as strong compared to like one of these, right? So if you simply just wait until the draw is very clear, aka a very prominent draw in the markets, pointy high here, and just simply avoid trading and trying to force a trade to these low probability lows, then it will definitely increase your win rate a lot. So generally, when looking at draw on liquidity, always just zoom out to higher time frame, because higher time frame holds higher power, and just look for these points in the market where it stands out, it's pointy, it's prominent, it is very clear, because in order for the markets to move, it needs to go out and take these lows, right? Like your orders sitting at these lows in the market, and price, the Nasdaq, needs to go out and sweep these lows in order to move higher, right? The Nasdaq is an overall bullish index. So let's say we're in a uptrend. You want to target these higher time frame lows and higher time frame highs because they are very strong draws. So simply when looking and trying to understand draw on liquidity, just look for pointy parts in the market, right? It, like, you can probably see it from afar. They stand out, and of course, higher time frame holds higher power. All right, now as a continuation trader, you are obviously looking to take trades in a trending market, right? And a lot of people do not understand the simple concept, and it is such easy, but a lot of people do not have the discipline to do this, right? And it is simply just trading in a trending market, right? Here, bring the camera, right? So I'll show two examples here. Right? You see overall the past few weeks, the market has been very bullish, and in this case scenario, it's just showing the higher time frame. It applies to all time frames, but as you see, the 4-hour time frame is very bullish here, right? So if you're looking to take a trade, let's just say on the 4-hour time frame, which I never do, this is your ideal market, right? Now let's look at something that is not ideal, and that is simply a range-bound market. A range-bound market is when we are simply just consolidating, and right, you see a clear difference, trending market here, and then boom, we are consolidating, we are moving sideways, and the market does need to do this, right? Like, it is necessary for the markets are not going to trend every single time. So when you see the markets consolidating, and again, I know this is the 4-hour, but it applies to every single time frame. Like when you see markets going sideways, we're edging highs, edging lows, that is simply your key and your note to just not trade those markets. Because as a continuation trader, I trade a continuation. I do not trade a reversal. I do not trade support and resistance. I do not trade order flow. I don't top tick. I don't bottom tick. As a continuation trader, you can make your life 10 times easier when you are simply looking to trade in only trending markets, and only when the condition is boom, you see price is clearly moving in one direction. Now you compare these two things together, right? When price is trending and moving in one direction to where a pointy priced in the market, a strong draw on liquidity, a very prominent higher low in the markets. When you pair these two things together, trending price, strong draw on liquidity, all of a sudden your win rate goes through the freaking roof. So as a beginner trader, if I were to explain it to a toddler, and just a very simple way to understand it is like, and looking at like trending and ranging markets, right? I can't just tell you, yeah, this is what it looks like. You generally just need to, with your eyeballs, look at the markets like I just demonstrated to you. Boom, trending market, boom, consolidating market. You literally just see it visually with your eyes, right? So if you, as a beginner, right, if you just target these strong draws, higher time frame, 1 hour, 4 hour, wait until price on the lower time frame is trending, the 5 minute, the 15 minute, the hourly is in a trending market, to take out the draws and liquidity, boom, all of a sudden you have these first two things checked off, and all of a sudden your win rate is through the roof, and you're not trying to guess and predict where price is going because you already have a good idea. Because why? You are trading to a strong draw and liquidity. Right here, bring the camera again, because we have kind of a nice example here. You see, right? As a continuation trader, let's just say I am trading and trying to take longs to where? This prominent high in the markets, right? So what am I going to do? I'm going to wait for price is trending to that prominent high. What do I see? Price is trending to this prominent high. Okay. And then I'm going to catch a continuation long to that high. Let's say I enter off this displacement candle out of this retracement, out of this 4-hour gap here. Boom. Simple continuation higher, and I will get into the entry here. But this is just kind of an example of what it looks like, right? If you simply wait for trending price action, strong draw, your win rate will go through the freaking roof, yo. All right, now for the entry model, what you guys have been waiting for. Why do I enter a trade? So I'm going to give you it in the most simple terms of all time. Why do I enter trades, right? So as you know, you already need to be doing these first two things as a continuation trader. That is what you look for, what I just demonstrated. So after these things play out, trending market to a strong draw, what do you enter on, right? So first things first, you need to wait for a retracement in price. You need to wait for a retracement of price because you obviously cannot be entering all the way up here because your stop loss is not safe there. So you need to wait for first a retracement in price, because without waiting for a retracement of price, you are obviously in jeopardy to getting retraced down, right? So like, just think about it this way. If you're entering at the very top of the market, like let's just think crypto or generally investing wise, like think of it long term. If you're entering at the very peak of the market, right? Obviously you are in jeopardy of price going lower because there's not a lot of room. Obviously it could go higher, but there's not a lot of room for price to expand higher. So when you enter without a retracement of price and you FOMO in on an entry that is overextended, you will always be in jeopardy, and it is always a sketchy trade. So number 3 thing, simple terms, when trading a continuation strategy, you need to wait for a retracement in price. You need to wait for a retracement. And what does that look like? Simply just a pretty big leg retracing to maybe a high time frame gap. Again, this goes for all time frames. It could be a huge 1 minute gap, a big 5 minute gap. Again, this is just a 4-hour time frame example, but like you see here, boom, retrace into that gap. That is a beautiful retrace. You could maybe take a long out of this retracement right here, right? So step 3, when looking for a continuation strategy, again, I'll name it again. Strong draw on liquidity, pointy part in the market, trending price action, not in a range, not consolidating. And then once you have those things, you simply wait for a retracement in price. What does that take? Patience, right? Just be patient. Just be patient. Do not FOMO into an overextended price. Just like investing, you do not want to top blast the market. Just wait for a pullback. Wait for a pullback in price. Then let's get into the entry. What do I enter on? What do you enter on a continuation strategy? How do you have conviction to enter a continuation long when the RR is low? What gives you conviction, and why do you enter a trade? Let me show you. Let me show you, right? So I'll just show you a bad example and a good example, right? So a bad example here, again, we'll stay on the 4-hour time frame. Yeah, let's see, you get this retracement here. We're in a trending market. You see a bullish candle, but let's say you want to take longs on this 4-hour close right here. Now you might be thinking, bro, why is this trade a bad trade? It's a 4-hour close. I mean, we're in a trending market. We got the retracement, but why is this bad? This is bad for a multitude of reasons, right? This is bad because 1, no draw on liquidity, right? You see here, we enter a massive bearish gap. So why would you be wanting to long if there's no draw on liquidity, right? So first things first, what is wrong with this trade is there's no draw on liquidity. Now 2, yeah, I'll give it to you. You get the retracement in price, but now it gets to the nitpicky things, right? It gets to the nitpicky things. You need to wait for displacement in price. Displacement. I am not your average ICT trader where I wait for IPG, CISD, break a structure. I enter off volume, momentum, and displacement in the market. So let me show you what that looks like, right? So I'll show you again. This example is an example of not displacement, right? You see here, boom, you see this big retracement candle, and does that flip out of the retracement candle really signify and really give you conviction that we are going to continue going in that same direction? No, right? So what I look for when looking for a retracement is the flip after we put in the retracement leg needs to be stronger and needs to invalidate. Keyword, invalidate the retracement, right? Because when you're looking for a continuation long, what do you need to wait for? You need to wait for that retracement we put in. It needs to be invalidated, right? Because you are looking for conviction and confirmation that we are no longer going to retrace lower, right? We are no longer going to retrace lower. That is what you're waiting for. So when you pair everything together now, strong draw on liquidity, trending market, you get the retracement, and then essentially after those 3 steps, you are waiting for confirmation that we are not going to retrace any deeper, and you need confirmation that we are going to continuing higher to your drawn liquidity. And what does that come from? It comes from displacement and volume in the markets. Displacement and volume tells you so much, so much about the markets. Instead of just pattern trading and IFEG like everybody else on TikTok, you see displacement and volume will tell you much more, and momentum going to the drawn liquidity. So let me show you an example of a good trade with displacement and momentum, right? So you see here, again, I'll kind of go over the same example, but we have the strong drawn liquidity, trending market. You get that retracement and price, then what do you see, right? You see this candle here. It fully invalidates this entire retracement leg. Because after this 4-hour close, I think I could tell you, and you could tell me with conviction, that price is no longer going to retrace lower to these gaps, right? This leg invalidates the retracement, right? So that is what you look for when entering a continuation long. Invalidating the retracement leg, right? So when you pair all these things together, boom, your trade will look like this. We should continue flushing right to the drawn liquidity, and that is exactly what happened here, right? And as you see in this example, you see this one candle here really does not invalidate the retracement leg. It is not clear, it is not displacing, and it is obviously not obvious as this candle right here. And what happens? It really does not play out, and you could have got stopped out, right? So really, the 4 main components when looking for a continuation. As a continuation trader, the most simple things, I can put it to you, if you're a beginner, if you're kind of just getting into it, these are your 4 main components. Drawn liquidity, trading in a trending market, waiting for a retracement and entering off displacement and volume in the markets, right? That is my key components. That is what I look for every single day when looking to catch a continuation trade. It is simple as that. You really do not need to overcomplicate your strategy looking for a SMT, a double inverse fair value gap, a order block, literally pairing all of these concepts together generally is just so unnecessary. You are just overstimulating your brain and just having way too many things having to check off before you enter a trade, right? So if you simply simplify it, and this is the way I look at the markets, I do not think you need much more than this. So hopefully you guys enjoyed this video, how I look at the markets as a continuation trader, simplified as if I were explaining it to a toddler. And with that being said, in the description, my TikTok, Instagram, my Discord, where I teach trading for free. So if you want to join the Discord and learn how I trade in more depth, you can do that as well. And if you're watching this video Friday, right after Thanksgiving, Alpha Futures is running a 30% off discount, which is the biggest discount they've ever done. So if you're seeing this video during that time frame, Friday, take advantage. 30% off with code Jack at Alpha Futures will get you right. And with that being said, hope you guys enjoy this video, and of course, subscribe. Peace.